Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I got a positive response by some of the training I did. Let's do some more training. I'm going to use uranium as an example. I'm going to illustrate kind of my approach to everything. And I've got a bunch of charts behind me. We're going to only look at 3 different companies because it takes a while to look at all these from a certain perspective. And really what you do is you would look at a couple from a long-term perspective, and then you start digging into it and refining your views. So your time frame, you start from a very big perspective view, a very high approach view. So you look at it from a very big picture. Look at whatever data you can have, 50 years, 100 years, doesn't matter what it is. You want to get the big picture view. If it looks good on a big picture view, what you do is you continue to drill down into it. So the big picture looks good, check. Then you go to like a 25-year, check. 10-year, check. 5-year, check. 2-year, check. Then you're going into very small time frames. Anything under a year is completely small time frame for me. This is short-term noise almost. So you're getting into months, weeks, and then days and seconds. And you can drill down to the exact buy point if you guys really wanted to, of where you should be buying something. And I've got some notes here. I'll let you read them as I go through them. And I'm going to zoom in just a little bit on this section right here. And man, so you want the alignment to be good on all time frames. And what that means is exactly what I just described. You want to get a big picture view. You drill down and drill down and drill down, and you can drill all the way down to seconds. And if everything looks good from all of those viewpoints, which is ultra rare, but if that alignment does happen, that is when you've got something on your hands that you got to do something with. It's a super rare opportunity, and you should be buying that sector, buying that commodity, buying whatever it is, because all of the time frames align. You want to have good valuations. Those are the ratios that I go over on the channel a lot. And all ratios are telling us is an asset versus an asset compared to history, the pricing. That's what a ratio is. And everything we do in life is a ratio. So when you go to the store, a grocery store, you buy, what are the dollars per ounce? That's a ratio. And then you ask, what's the dollars per gallon? That's a ratio for gasoline. And then what you do is you compare it to price. And that's all I'm doing is I'm mainly using gold as our monetary measuring stick and using another asset against gold because gold is, quote, the inflation-adjusted monetary measuring stick. And that's why I use the ratios in relationship to gold. And one thing else that you want to be looking at is if you have good ratios, you have good alignment on your technical analysis on all time frames. If there's a way that you can get a changing market condition where the valuations are going to change, you can use that as kind of a third measuring stick. So if you think commodities are going to change and the technical analysis looks really good, the third thing that I found is a leading indicator is the housing starts. The housing starts is a leading indicator of inflation and will directly correlate to the M2 money supply growth because of credit expansion in a fractional reserve lending system. And if that increases the M2 money supply, that is our initial leading indicator of everything. So we need the changing market conditions for money flows to rotate into sectors and change the valuations or the ratios. That is what the ratios being low tells us where the money has flowed and where it has flown from. It does not tell us that the market conditions and the perceptions of humans are changing and will rotate the money differently. That's what your market conditions are for. And again, all technical analysis that I'm going over here can be performed on different time frames. It is all valid. It can be seconds, it could be minutes, it can be hours, and it could be decades. Buying and selling pressure applies to all of those time frames. It's all the same. Look for higher lows. That is one of the key points. You want to look for strong moves higher and weak sell-offs for continuation patterns to the upside. Look for patterns that are developing just in general. They don't need to be perfect looking. They don't have to be the perfect looking pattern, but if the overall general pattern is very close and it's following, we'll call it some of the rules, then I think everything's okay. And one thing that you can do, and almost everyone I think can do it, is trend lines are simple analysis tool. And it just takes practice to get really good at this stuff. And what I'd like to do is combine all of it. If you can get an alignment on all time frames with really good ratios, and the market conditions are changing, either inflation, deflation from the housing starts, and you apply all of these traits over here on your charts, that is what I consider to be the perfect alignment. And that's where I go big. I go big in a sector. I overweight positions. I get positioned and I hold. And if you've got good if you have very good charts on the big picture view and the medium term view, and you still have good ratios and your market conditions underlying the structural market conditions are still the same, I don't really care about the short term that much. So long that you're getting higher lows and things are all intact. So let's dive in and let's start applying some of this stuff. So we'll go to the top here. Again, this is North Shore Global Uranium Mining Index, and I have a blank sheet here. And I'm literally, these are all made from stockcharts.com. That's where I pulled it, and I just took screenshots from it. I'm literally just going to use Microsoft Paint to show you guys how to do this. And what I look for is, you can see up top here, you can literally just draw this line in like that. See what I did there? The more contact points that a trend line has, the stronger the trend line is. So we've got 1 contact point, 2, 3, 4, 5, 6, 7, 8, 9, 10, maybe 10 contact points, 11. This is a very strong trend line. The more contact points that a trend line has, the stronger it is. And I'm going to throw another trend line right here because I see 1, 2, 3. And I would say 3 points is the minimum to make a trend line. That's kind of a general rule of thumb. Sometimes I use 2 just to see if a potential third could happen. And that's something that I look for. Now, another thing I look for, if you look in here, see these big buying pressure days? These run-ups have massive buying pressure in them. This entire run-up here, the entire run-up here, and then the run-up here. Notice that the down days, these guys here, these guys here, notice how they're really small in size. We've got 3 little guys there. When you have a big run-up like this and then a small sell-off, it's a continuation pattern to the upside. Notice that we've got a low, a higher low, a higher low, and we're going to, I don't know if we're going to come back in this channel and come back down and create another pivot like that, which is another higher low. As long as you're getting higher lows, I like to stay in it and just ride it higher. Ride it higher. And remember, this is on a weekly candlestick basis. Each candlestick's a week in duration. So we're going on up. Everything looks good. And what we're doing is, if this line holds here, right there, we're going to try to break out of here. And it may take some time. It may go sideways for a little bit. This trend line is ultra strong. And we have to try to break through it. And if it doesn't break through it, we'll probably head lower and back to the bottom of the trend line. The volume, so this is the bottom line. This is the volume down here. The volume is how many shares were traded that day. The bigger the volume, it means that you're getting more people interested in it. The sector is having a lot more interest in it. And this is your relative strength indicator. Sometimes you can draw trend lines on here like, oh my goodness, that's not. Yeah, don't do that. I'll draw a trend line here, so you can kind of draw it like this. And when you break above it, you can see another big move. And we're breaking above it right now. The RSI is kind of breaking out, and you can draw another one here. So when you see the trend line of the RSI break, which this is a lagging indicator, you can just say, okay, we're probably going to break at some point. If it breaks, and you know it's broken. Problem is, it broke already. If you're a good, solid trader or investor, what you would have known is that you could have drawn these two trend lines in and said there's a high probability that we could potentially turn at this point if you draw the trend line from these two, and if you saw that the candlesticks were contracting in length or in body size. And that's just the opening price and the closing price. And there's your little wicks at the top and the bottom. This is the opening price, this is the closing price on an up day white candlestick. So opening price, closing price, big body, and it gained momentum and pressure throughout the day. That's what we want to see. The big buying pressure days is what I call it. On the right-hand side, we've got this is the daily. We're diving in. Notice 2020. Now the data only went back to 2020 because I think that's when URNM opened. But here's on the daily analysis right there. It looks a little bit different. Weekly, we didn't really close above it. On a daily, we came above it and came back. And we're looking for like a cup and handle type pattern to see if it's going to hold. We're trying to break to the upside, but there's not too much change here because we already analyzed it on a weekly basis. So coming on down, looking at we're zooming in a little bit more to see we still have this big buying pressure move right here. Big up days all through here with big volume. The sell-off, if you notice, we had a couple of strong sell-off days. It's usually in the beginning, and it's like a water jug that falls over. If it's a full of water and the jug falls over, the most amount of volume and movement comes out right when it falls over. And then over time, it slowly leaks out. So what happens is we get this big impulse move lower, and then it slowly gurgles the air back in, and it leaks a little bit more, gurgles up, leaks a little bit more. And you get this pattern that comes back and forth that is considered kind of a steadying pattern where the buyers equal the sellers. Then notice here, we get the buyer stepping in, and we have huge buying pressure. Small selling pressure because the two small little down days. So big move up with the big buying pressure, these 2 days. Small little sell-off with the wick at the bottom here. The wick at the bottom, it's a down day, it's a red day. And what happens is, you opened here, the day it traded all the way down, and then the buyers bought it back up to this closing price here. This is still a down day though. That's what that candlestick means. Now, if you want to zoom in even and look at things from a different perspective, this is a max chart. It's the same as this chart up here. You can also start charting on a non-candlestick chart, just a line chart, just to see if it's still valid. You can see it's still valid. It just gives you a little bit different picture. Something like that. And then you can also zoom in even more. This is a 5-day. And what we saw is an uptrend broke here. And now we're probably breaking the downtrend there. So it came up, it broke the downtrend. Okay, we're not, or an uptrend. We're not in the uptrend anymore. And then we broke the downtrend, and we're not in a downtrend anymore. We're kind of going sideways neutral, which means we could potentially head higher. Could. Next week. And that's what this reversal candlestick is. That's what this hammer pattern is right here. This is what it looks like in a line candlestick chart real time. It means that we broke the downtrend here and we could potentially move on up. That's why hammer patterns work. That is the reasoning behind a hammer pattern and why it's valid. It is a reversal pattern. It was getting sold off, but throughout the day, it was bought back up. It's perfect. I also have another thing I want to show you guys. I also did it for Bannerman. So this is Bannerman. And This one's got a lot more data on it, behind it. So here's Bannerman Resources on a weekly candlestick basis. And what I want to show you is kind of what this thing looks like and what my viewpoint is. You're coming on down, and you can see this come on down. See that? And then I just want to show you something. I'm going to draw this in real quick. That's the COVID crash. When you're coming down, the general trend is down here, correct? You should say yes. The general move here is sideways. And now the general move is up. Notice that? And there's also something else I want to talk about here. When you look, the size of the downward move, you want to see a contraction. So this move here is smaller than this move here. Then we came up, this move here is smaller down. This move here, smaller down. This move here is smaller down. And then what you need to look at, I'm just going to combine those, is what you're seeing is if this entire move between these lines here, what it's doing is it's contracting in size. Think of the selling pressure. If this is selling pressure number 1, selling pressure number 2, selling pressure number 3, and then we've got 4, 5, and 6. 1 is larger than 2. 2 is larger than 3. 3 is larger than 4. 4 is larger than 5. And 5 is larger than 6. In a big picture view, this momentum, if 1 was momentum, this had the most momentum coming down. It was big momentum coming down, and the momentum slowed, 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 and slowed. It's like this car was coming in this direction, and it's turning, and it's about to turn the other direction. In order for it to turn, you need that momentum and that velocity to slow down first. Things just don't just come down with big momentum and then just reverse higher like that. Very rarely on a big long-term perspective view. What we want to see is that slowing in momentum, and that's what I did here. It's a big slow, downward move. It went sideways, the momentum, and then we're going back up with the momentum. That's exactly what you want to see. And if you are an aggressive investor and you use the ratios to the best of your knowledge, we had a uranium ratio super cheap in this area. It was over 60 to 1. 60 pounds uranium to 1 ounce gold. If you saw that the downtrend momentum was down here, but it's going sideways, it means that we're about to turn. The momentum of 1, 2, 3, 4, 5, 6 is slowing with time to make a turn upward. If the ratio is at 60 to 1, you're seeing the momentum slow and turn, and you're looking at the housing starts, which means that we are going into an expansionary phase of real estate, which is inflationary. What you're doing is you're tying together valuations, technical analysis, and market conditions, where this is about to turn. And where do you think I bought it? I bought it in 6. Because I knew that this was before it and that we were about to turn upward. Now, this is a weekly candlestick, remember, so that this is a big picture view, and this is like the most excellent looking chart. We broke through this pattern down there, it broke to the upside, and now we're moving and surging higher. This is where you hold. You start looking at your valuations. This is where you look. And your uranium to gold ratio is still incredibly cheap. It's over 40 to 1. I can't remember the exact off the top of my head, 42 to 1, something like that. But it's greater than 40 to 1. Now, looking at this chart on the right-hand side, we zoomed in. This is a daily candlestick. Notice that the time frame is from 2019. This is from 2008. We're zooming in. And what we want to do is we want to see where the best entry point is. Right here, notice that downtrend line, which we're zoomed in on number 6 here. What I see is a trend line break right here. That's where you should have been loading up like no other, right here. That's where you want to load. That's your lowest risk, best entry point of anything where you have momentum changing. So on this day right here, in December and November of 2020, was the lowest risk entry point as we were breaking that day. If you are like me, you're probably going to be buying before that. You could buy anywhere in here, that whole area in there. So anywhere in here would have been the best time to buy, obviously. But if you're impatient, you want it to buy into strength where you're trading it, you want to buy it when it turns and breaks, and you buy into strength right here. And that's where you load up and hold on. I'm a long-term investor, so what I would have been doing is cost averaging in all in this circle here, because I know that the market conditions are changing. I know this is incredibly cheap, and at some point this is going to change. So I buy the entire bottom and I just cost average in all through here and wait for the break. So zooming in even further for Bannerman, this is a daily analysis here. And what we're doing is we're looking for trends. I'm seeing a trend potentially here. You know, maybe we throw the trend line here. You can see we tapped it there. We're trying to break through it. But that could be a potential trend right there. 1, 2, 3, 4 hits. And now we're trying to break up again. So that's a trend line there. Now look at the candlestick patterns. Are they big in the big buying? So we have big buying pressure coming up, smaller sell-off, higher low. And we're coming up and hit again. And we might get a low somewhere in here where it comes back and tries to go again. Looking at it from a little bit big picture view, a little bit different viewpoint. What I'm looking at here is if we draw a line across, are we breaking a pattern? Yes, we are. This is an accumulation phase over that time when we just broke to the upside. This right here is like launch mode. Now, another thing I want you to talk about is symmetry. Symmetry happens when you kind of draw a bottoming point, wherever that bottoming point is. And it could be somewhere like here, where this side of the chart is going to look like this side of the chart. Not perfectly, but roughly speaking. And the point here, that little move there, is that little move there. So, guys, it's not going to be perfect, okay? So don't expect it to be perfect. But the symmetry of this move, if I were to take this move here, I don't know if I can, hold on. So if I flip it like this will be something that looks like this. So this move coming down is going to look like this move coming up. And what's that is called is reverse symmetry. It's this side is going to mirror this side. And why do I say that they're going to mirror each other like this? It's because you're going to hit the resistance points as you go up, and they're going to be very similar as you hit resistance of these buy and sell points. And it's going to look something similar to this. So this side will probably look something similar to this side. It doesn't mean that it will be perfectly like this. The lows may not be as low and the highs may not be as high. So you might hit and might come back just a little bit. Come up, come back not as much. Maybe it does come back as much. It depends on what the conditions are at that time and what happens. But it'll look similar. And then looking at it from a zoomed in perspective, here it is on a zoomed in perspective. You draw this in, and that's kind of your line, and we're still in an uptrend on the short-term basis of 5 days. So this looks good right here to hopefully continue. But remember, the short term is less reliable than the long term because anything can impact the short term. What we're doing on this long term up here that I scribbled all over the place, this is driven by fundamentals. The fundamentals, Jesus, I'm not even trying to write them out. The fundamentals are driving this big picture view. The short term, anything can drive this. Anything can drive it. So if you want to be an investor, what you want to do is you want to find this type of chart pattern with good valuations like we have in uranium to ride this thing higher. And The reason that the long-term big picture view and the wealthy take that patient approach with long-term investing is because it's the most reliable approach. If you guys are trying to trade short-term and do this daily stuff, it's not as reliable, and you're going to be thrown all over the place because anything can impact the short-term price. Something with news comes out and it drops like that. Well, this chart looks good. It should go up, but it went down because of news. Or the overall market dragged it down. Or some news came out about a war, and then people, their first initial reaction was a sell-off. It doesn't matter what it is. What I like to do is stick with valuations and the big picture fundamental view. I also did one other one to see if you guys can see it yourself. So here is Encore Energy. It's one of my, Bannerman and Encore are some of my favorite. Now, here's the big picture view. This thing really is just a big bowl. It's a big bowl that's coming up. And if you were to cut it in half, something like, and I may not have it perfect, guys. Maybe something like this. And I'm just going to try something, all right? And I did not do this beforehand. So we grab this, we copy it, we paste it, we flip it horizontal. Now, look at this move here. That's what it looks like here. Now, look at the moves. Tell me that's not symmetrical here. That's the move there. I paste it here. It looks exactly the same, doesn't it? See that? I mean, it's a little bit different, but the downward move, the downward move, the sideways, the up move, the sideways, and then we moved on up. We had a sell-off there. There's your sell-off, and then we're moving on up. So more than likely, this is probably going to move on up still. And I wanted to just show you that reverse symmetry and how close some of these patterns are when you flip them over from its previous trading. So this one looks really good. And then looking on the right-hand side, what we're trying to do is find patterns. We're trying to see if we've got some sort of pattern there. And what do we have? We've got strong resistance line, trend line coming on up. We're trying to break through it, or we're just going to ride this trend line higher and higher and higher. Here's Encore Energy. It's the same thing, looking at it, the reverse symmetry as I did here. It's the same pattern. It comes down, that's why we make these big bowl-shaped patterns, and that's why people use them. Looking at the 5-day, this is a 5-day pattern. You draw you could draw a trend line in here, but the trend line doesn't look too good on any of these accounts here. Maybe this is a better trend line here because you got at least 3 contact points or so, but that's probably the best trend line you can draw on the short term. And then you start looking at what can you draw on the downward pattern here. And sometimes you cut off the top of this because it could be like an anomaly. And you've got 1 hit, 2 hit, 3 hits, 4, 5, 6, 7, and we could break to the upside here. Well, signaling a move higher here. Potentially, if we break to the upside, which it looks like it might. And then I also did pattern recognition. So this is a pattern here. This is a similar pattern here. And what I'm seeing is I put this guy here is this guy here. It came on down. We went through this accumulation phase. This pattern there it could be this guy here. If you draw it, depending on how you draw it, you come up and over. You kind of come up and over, which we're doing right now. And then you're probably going to see this thing rocket higher. Notice that I did this on August 9th. The pattern suggests that we rocket higher. Look what we did. We rocketed higher. Oh, it's beautiful, guys. I love watching this stuff and finding these patterns. It's pretty cool. So that was the pattern right there. So we're probably right there in the pattern. And we're about to maybe do that, depending on what we might do what this is right there next. Maybe. We'll see. It suggests that this could happen on this side too. There's no resistance on this side in the symmetry. So another thing I want to talk about, the more you trade here, all these turning points. And if the volume's really high, if you got lots of trading volume through here, when you go and the price goes to go back through this pattern or these trading area, like all this trading area in here, your stock coming back up is going to posit these areas because there's a lot of sellers there. And then you'll have to break through it and come up. That is why when you look at these patterns that you can have reverse symmetry, is because there's buyers and sellers that bought the stock. And if the volume's a lot, it's going to be a lot of buyers and sellers in that area. So when you come and you try to break on through it, it's going to encounter resistance. And the closer that buying and selling occurred, if it happened like here, you're going to encounter more resistance when you go back through it. So that's kind of what I wanted to cover for today. And hopefully you guys get a lot out of this. I went through 3 companies. It takes a long time to kind of analyze these things and describe it. And I wanted to show the reverse symmetry portion. So when you come from a downtrend and you start seeing things come back up, you can say flip the reverse symmetry over, and it says if it matches in the beginning, probably it's going to continue whatever that reverse symmetry is. And you can kind of get a little bit better buy points. Look at the buying and selling pressure like I was doing. Big candlestick up days, small down days. That will precede big moves higher in the future. It means that the buyers are in control, not the sellers. So what I'm doing is I'm combining absolutely everything that I know in technical analysis of pattern recognitions, of chart patterns, of buying and selling pressure, of valuations, market conditions, and all these things. So I will never go long in a stock if I don't have valuations and market conditions as my cover behind me. I consider that cheating. So what I do is I say, okay, I got great valuations. The market conditions are changing to an inflationary environment, and then I change my paradigm and look at all the charts from that perspective. I look at it from that paradigm saying, I am going to be looking at this from an inflationary standpoint. I'm going to be looking at commodities in certain areas, and then I'm going to be looking at the technical analysis from a very bullish perspective, because it's saying that I should be looking at these sectors from that perspective. Doing just technical chart patterns to do technical patterns is not nearly as reliable. Trust me. So I'm looking at it from a jaded view, and I'm looking at that symmetry, defined symmetry, where we can really move on up. Now, commodities, in my opinion, are the best areas for investment because they can move the greatest in the shortest period of time. Tech patterns and other ones, not so much. And a commodity can go up in price, and the commodity companies can very easily go up with that price. So in a commodity company, the commodity is the most important thing. Commodity price in the performance of the commodity producers. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't. And thank you for listening. This is Finding Value.